welcome to this video. In this video I'm going to be making a stock analysis of Hecla Mining Company. If you like this video, please don't forget to leave a like and subscribe, and of course remember this isn't financial advice, this is purely for entertainment and educational purposes. Now, as you can see, yesterday Hecla Mining Company increased by quite a lot, by 18.17%, and you may wonder, well, why is that? And that is because they had an absolutely amazing earnings, as you can see right here, up by 40%. Now the reason I like this quite a lot is because of course the past 4 earnings have been quite poor, so I have to see that they increased so much. And another reason why they increased so much is compared to last year in the same time period. As you can see right here, last year they only made 245 million this period. This year they made 300, up by quite a lot, which is absolutely great to see. As you can see, we even broke through the support level right here. As you can see, just above 6. So we now hit some previous support levels right up here, or peaks. So we increase more than that. Who is gonna say where the stock is gonna land? Now, as you can see as well, the RSI is quite high at the moment at 78, which of course should be a bit more careful, because this means it's overbought, which means the price up here is a bit more unpredictable than when it's trading down here. Now, if you don't know what the RSI is, that is the relative strength index. So it's above 70, it's overbought. It's between 70 and 50, it's in the upper channel, meaning the stock is moving upwards. And if it's between 50 and 30, it's in the lower channel, meaning it's downwards. If it's below 30, it's oversold. Now, as you can see right now, it is overbought, meaning it's rising rapidly, which means it's a bit more unpredictable. As you can see, these peaks often disappear quite rapidly again, and it's the same with oversold, but down here, it's below 30. As you can see, last time they had a poor earnings, they went down here and oversold. As you can see, fell rapidly. But as you can see, it rose rapidly after that, which means, of course, it does mean that this is going to fall rapidly. As you can see in post-market, it is up by 0.69%, but it doesn't mean it's going to increase either. So be a bit more careful when it's trading up here. Now, as you can see, the beta is in this is a bit more than the average at 1.15, which means it's a bit more volatile than the average index, which should surprise you because mining companies are typically a bit more volatile, and they're often quite cyclical, as you can see right here. See, it normally trades between 4 and 6, or at least it has done in the past year or so. As you can see, it's a decent sized company with $4.5 billion market cap, and they have decent dividends as well, given the fact that it's such a small stock at $7, and they pay them out 4 times a year. As you can see, they have increased their earnings more and more and more. That's because gold price, silver price have been increasing. I'm going to show you right now. As you can see, over the past 10 years, gold price has increased quite nicely. But if you just take a look at the past year alone, as you can see, it has been increasing incredibly fast, which of course is lovely to see. Which is also the reason why they made so much money. And it's basically the same with silver, as you can see right down here. The past year alone, as you can see right here, it has been increasing quite nicely. But it's a bit different graph. As you can see, silver takes typically a bit more volatile ups and downs. Well, the past year alone has also been just incredible for the silver price as well, which is the reason why they're making so much money at the moment, and I don't see any reasons why gold and silver price should drop at the moment. So of course I still like the stock quite a lot. Now for the dividends, as you can see right now, dividend yield is at 0.57. Now as you can see down here, they have been increasing their dividend quite nicely, and I anticipate they're going to increase it even more because of their past earnings, which was absolutely incredible. Now the income statement, as you can see right here, it's going to look a bit funky, and that is because this is the name of their mines. And I like this quite a lot because you can do this with every single mining company. You can see which mines they have and how much they're earning, and you can just Google these mines if you want to know what's in them, if it's gold or lead or silver or copper or whatever. And of course, this is quite nice to see. Now, if you continue downwards in performance of the stock, let's just go back past 10 years. Which is a very old company. As you can see here, the past 10 years, it's quite volatile. Sometimes we see poor earnings, sometimes we see amazing earnings. Well, it is quite a nice company. I do think so. If you should be owning a mining company, Hecla Mining Company is one of my favorites. Now, if we go to the technicals for the day, as you can see right here, for the day it's a strong buy, and for the month it's still a strong buy. But you should be a bit careful with the technicals because we have a huge gap, which I'm going to show you right now. So we have a huge gap right here, and the technicals only take into consideration each single candle. Just the fact that the price is so high at the moment means it's going to be a strong buy. You should always be a bit more careful with these huge gaps if you're using moving averages like I am right now. Now, the analyst rating on this are quite decent. As you can see right here, we have a strong buy on 4 on strong buy and 5 on hold. Now we have a max up at 12.5 and the minimum is at $6. Now I do think this is quite realistic, as I don't think it's too poor. Now it wouldn't surprise me if it hit either. Because if we see poor earnings next time on the 5th of November, this is definitely going to be where we're at. But if we see another great earnings, I actually think we can even beat this. And it's also going to be interesting to see where the gold and silver prices develop the rest of the year. Also, given the fact that tariffs are a bit into play again, especially with India, and also the fact that some AI chips is void of tariffs, which of course is nice, which means chances are we're going to see the dollar strengthening, which could devalue the gold a little bit. Now, as you can see right here, the annual earnings next year, they're estimated to make a big more in the EPS than their guiding downwards in 2027 and downwards, and it's exactly the same down here in the revenue. That's because some of their mines are going to be running dry after 2026, at least by the estimates currently. So unless they find some new mines, this is going to be the way it's going to be going. So currently it is a quite nice company to have, and it also is because it's a very old company, which I'm going to show you right now. As you can see down here in the financials as well, if you go overview, it is a very old company. And as you can see as well, they have a decent chunk of debt, and overall the debt is about a bit over 10% of the market cap, which of course isn't great, but given the fact that it's a mining company, this should surprise you. They always have quite a lot of debt, and the fact that gold and silver prices have risen so quickly, chances are they're going to be paying off some of that debt. Now that was my analysis of Hecla Mining Company. If you like this video, please don't forget to leave a like and subscribe. If you want to see more videos like this, please leave the companies you want me to analyze in the comment section below.